All right, everybody, we're going to get started a little early, give you more time with Valentin. This is Valentin Schmid from the Epoch Times. Welcome, Valentin. Thanks for being here.
Hey, Adam. Thanks a lot. Thank you, and thank you all for coming. As free market people, we like competition, and the competition here is certainly tough with some really big shots in the big room, but I'm going to talk to you about money, so I thought a few people would turn up because money is interesting. And why did I choose this topic, Bitcoin as money? First of all, a lot of people, they're not even that into Bitcoin anymore. It's sort of like old school in the crypto space. And then recently we had a big crash. The price went down 50% or even more, 70%, then rebounded. So why is this concept so important, Bitcoin as money? Because to me, and that's probably the reason a lot of you also got into it, for two reasons. A, to make some money. Trading, nothing wrong with that. Increase your purchasing power. Two, a lot of you, and including me, still believe that Bitcoin has the potential to change the corrupt and cumbersome incumbent financial system. But in order to do so, it has to compete against the incumbents, which are not only fiat money, but also gold and other crypto. And I'm going to talk mostly about fiat and gold, and a little bit about other crypto. And then we can look at what are the relative advantages, what are the relative disadvantages, what's the valuation, and that will also help us to get to a reasonable price target. Because what I don't like about this whole debate many times is you have the established players and they say, oh, it's a scam, it's a Ponzi, it doesn't work, only criminals use it. And then you have the hardcore Bitcoiners who says we're going to replace the banking system next year and it's going to go to 1 million. I think both of them are not very realistic, and there is a more nuanced analysis I would like to present to you. So we're going to start with, what is money? So money is a medium of exchange and a store of value, and the most important goal that we have with money is we want to exchange value, the goods and services, the labor we sell, over time and space. Either we want to make a transaction quick, we want to do something, I want to buy something from California or from Europe, that would be exchanging it in time and space. Or I would say I'm going to stash some away and I want to exchange the value I provided now, I want to exchange that for something in the future. And for this, it needs to be divisible, recognizable, indestructible, stable value over short periods of time and long period of time. Security is important. But also very important, and many people forget that, even the gold bugs who say, yeah, but what if we don't have electricity, you can't use a Bitcoin. Well, guess what? If there's no commerce, if there's no production, and there is no commerce and production without electricity, your gold won't do you much good because you won't be able to buy a lot. Then you're better off camping out on your own farm and growing your own crops. So let's not forget that. Commerce is important also with regard to censorship resistance and regulation. So let's look at Bitcoin. Bitcoin clearly has medium of exchange properties. You can pay with it on the internet. You can, do transfers among yourselves with limitation, but it definitely has that. It has store value properties. It's basically, since 2009, gone straight up, except for the volatility, also recently. But in principle, you increase your purchasing power even. So it has the store value properties. Issues are still adoption. So the extent to where you can pay, with whom you can transact, the scaling. The blockchain is pretty slow, we all know that, and the volatility is an issue. So what about fiat? Most people don't like fiat. I have a sort of love-hate relationship with it. I like it in some ways, and some other ways I don't. But you cannot argue that it's a great medium of exchange, especially within national borders, and credit cards even work pretty well internationally. So depending on which instrument you use, it definitely works as a medium of exchange. It is very stable against goods and services, consumer goods and services. They hardly change from one day to the next. But it's a very bad store of value. Your dollars have a built-in loss of purchasing power, about 3% a year. After 10, 15 years, you lose half. So clearly only one positive here. And then the fiat and the banking system, they're centrally planned, corrupt, and abused. And they're basically propped up by the force of the state, where fiat is legal tender. People are forced to accept it, and you're forced to pay your tax mostly with bank money. So definitely some disadvantages there too. Gold, again, has advantages and disadvantages. Gold over the very long term, and we have a lot of data there, is the best store of value. And I'm going to tell you why. This is an argument that gets lost on many people or not often talked about. But gold is sufficiently scarce, so central bankers can print it and can't inflate it, but there is an interplay between commodities, which are the fundament of production, and gold production. So at one point, if you have a very high gold price and you throw enough electricity, oil, cement, water, whatever you need to mine gold, you can increase production a little bit. It's not like quantitative easing where you can print 1 trillion ounces in a year, no, but you can increase production a little bit, and that stabilizes prices over time. And that's important because we don't have that with Bitcoin. So that's good for gold. Problem, medium of exchange in the digital age, nobody's going to go with the ounce of gold, which is worth $1,300, $1,400, goes to the shop, then they split it in half, they weigh it, then they give you back the chain. Not going to happen. Forget about that. We're way beyond that. And if you store it with some third parties and you use the credit card against your gold balance in the vault in Switzerland, like gold money, you always have the trust factor involved that you don't if you hold your coin or if you hold your Bitcoin. And let's not forget, gold naturally was decentralized, but the governments co-opted most of it. The big monetary gold supplies are all in government hands. Central banks, they control the market, so it's not really decentralized. And they use and abuse it also as they want. So Bitcoin, on the other hand, has some clear advantages, in my opinion, that the others don't have, which is the decentralization, which is most important in terms of monetary policy. So we know it's a hard money protocol. There's not going to be any inflation. In fact, it's very deflationary. That's going to be hard to change because the protocol cannot be changed without hard forking it. You have the ultimate ownership. Like you hold the gold coin, you hold your Bitcoin, but it's much easier to verify than gold because you use the right software. You know you have a Bitcoin. If you buy a gold bar, you don't know that you have not tungsten, so you have to verify it. It's nobody's liability, and of course it helps that it's electronic in the digital age. Now that, having discussed some of the pros and cons, let's look at relative valuation, because ultimately when you talk about money, you're not looking at production or cash flows that you can value like you can with bonds or stocks. No, you're really talking about relative value. And notice that we're using the dollar as the unit of account, because that's what we are used to. Like we're expressing value in dollars. So we've got fiat money in the United States, 1 trillion or so in coins and notes, and about 14 trillion in bank money. We've got gold in the world, 8 to 10 trillion, not all monetary, also jewelry. And then we've got Bitcoin, which is roughly actually I just noticed this is my old presentation. We made a slight mistake here because that was still, that was the market cap in December and it doesn't have any pictures. So I apologize for that. I put in some nice pictures of gold and fiat and stuff. I hope you can live without that. So Bitcoin 250 billion. So relatively speaking, Bitcoin is pretty cheap. And we just went through the advantages and disadvantages. It's not like one thing is really so much better than the other. So in my opinion, even Bitcoin as is could be worth $1 trillion. Then we have the other assets. Let's not forget about those, because your dollars have a built-in purchasing power loss. You have to go into bonds or stocks to protect it. So 30 trillion in stocks, maybe 25 trillion after the recent crash. Government debt 21 trillion, but all of this has risks attached. But Bitcoin is also competing with those, and there's no reason it shouldn't get a slice of those assets. Then Bitcoin is not a bubble, because if you look at the valuation, that's the most important thing. Like bubbles are always overvalued, relatively and absolutely speaking. .com stock bubble was overvalued. Tulips were overvalued. It didn't reflect the utility and the value of the asset, whereas Bitcoin really, we see it has a pretty low valuation, even at 250 billion or 200, what it is now. It's under-owned. Not many people own it. If you think about the big bubbles in history, everybody owned stock in 1999. Everybody owned tulips in the Netherlands. And it doesn't have this reflexive credit cycle, at least I thought, because normally when you buy stocks or houses, you can always go to the bank and say, hey, my stock value or my house value increased. Give me more money loan me money against that. You can't really do that with Bitcoin. We have the people from Salt here. They started ramping up operations recently, but not really before December when we had, a sort of little bubble pop. Because I learned later that a lot of people just circumvented that by mortgaging their houses and putting it into BitConnect, or getting out business loans and stuff like that.
Real quick, can you just 10 seconds on reflexive credit cycle? What do you mean by that?
So that's it. Like, where you have an asset, you have stocks in your margin account, and the stock goes up, it doubles, let's say. So then you can borrow against the increased value and buy more stocks. So it's a feedback loop, positive and negative. And I thought we didn't have that with Bitcoin, but probably we did have it a little bit in a roundabout way. I think that is now over. And I think now the long-term holders and the people who really understand what they are doing are back in it, and that's driving the price. Now, in terms of the special features, let's drill into a little bit what Bitcoin has, what the others also, where I think it's clearly better. So the Bitcoin network itself, and I'm talking about the network, I thought the presentation before this one was really good because it illustrated some of the risks, but the exchanges can be hacked. Yes, your wallets can be hacked, but the Bitcoin network itself is very secure. I think except for one minor glitch early on, hasn't been hacked in over 10 years. Fiat has massive security problems. Even, you're not talking about single banks. I think the SWIFT system was recently hacked, so the system is hackable. Gold, obviously, massive security problems, can be stolen, confiscated, etc. So Bitcoin, in my opinion, wins out here. Censorship resistance. Bitcoin is far harder to confiscate and to censor than gold, and it's easier to move than gold because you keep the keys in your head. And it's far superior to fiat and banking, which can be frozen at any point. The government basically controls it. But let's not forget, while this is a desirable property, again, thinking back to the commerce analogy where you use money for commerce, if the government makes it harder for you to use Bitcoin, to buy Bitcoin and use it for commercial transactions because of regulation or banning it, it will lose some of its value because you just cannot use it with ease. And so that's an issue. I would rather have that not happen, but it's always good to have a joker to say, oh, I'll have to leave the country, I'm just going to take my Bitcoins with me in my head. So we talked about the monetary policy a little bit. It's deflationary. Bitcoin is sound money, like gold, maybe a little bit too deflationary. We talked about how it doesn't have this interplay between commodities and gold, which may really prevent it from becoming a very, very stable medium, whether it be long-term or short-term. But it's definitely deflationary, and it cannot be co-opted as easily, or the monetary policy cannot change, so that's good. Then costs, very important, because you always hear this FUD about Bitcoin so expensive and it's inefficient, et cetera, but not when you compare it to, again, fiat and gold. Gold mining, hugely resource intensive, it uses tons of electricity, people die doing it, all these kinds of things. There's a great study called Order of Magnitude. If you want to really drill into it, read that. Fiat, banks, branches, employees, servers, air conditioning, it's massive, way more expensive than Bitcoin. The only argument you can make right now is that per unit of value, again measured in US dollars, because Bitcoin only has 250 billion, it's still not that much more efficient, but that can be solved by just increasing the price. So not a big issue. So scaling. In order to become really stable and really replace the banking system, it needs to scale. And in my opinion, the Lightning Network is a good analogy to what happened with gold in the past, where people got tired of carrying the coins around. So they started to issue papers. So they didn't move the actual asset. They did some accounting, and then they netted it out, and only the net amount moved. And that's basically the Lightning Network for Bitcoin, except for you can actually verify where the original Bitcoin is on the gold on the blockchain. So you don't have to move it, but you can verify it. And this is better than what they did with the paper scripts against gold, because the merchants could say, hey, I've got 1 gold bar, but I'm issuing 3 papers for 3 gold bars, and nobody can really check that because I only know about this. I don't think big blocks are going to work because of the math. And no matter which way you slice it or dice it, you always have the trade-off. More scaling means more centralization. Less scaling, less centralization. So big blocks, for example, if you really want to do all the credit card transactions on the blockchain, you need, blockchain is going to be, 10 terabytes big or 100 terabytes big. Nobody has that storage, so you're going to have a few nodes, maybe only one. So forget about the decentralization. Lightning Network also is more centralized. You only have 3 companies working on it. Okay, but it's for small payments, so it's worth the risk. Stability, again, very important, and I really don't have a solution for that. I hope the market can figure something out, but you need stability for loans. And whether fractionally reserved or not reserved, there needs to be a loan market for Bitcoin, because right now, the thousands of Bitcoins lying around in hardware storage with the whales are not being used. They're just sitting there. The entrepreneurs who need the funding cannot take them and actually do something with it. And why not? Because if I borrow, let's say I borrow 10 Bitcoins and I buy my resources with it, and my projections are I'm going to sell, let's say, 10 units of my product with each a Bitcoin, and then I repay the loan plus interest. But then the price, and forget about the dollar price, let's talk about the actual consumer prices. It goes down to 0.5 Bitcoins because Bitcoin's volatile. Then I have to sell 20 units to pay back the loan. And no business can calculate with that and make longer term projections. So we need stability. How are we going to get there? Everybody needs to use it. We need immensely deep bit stack and R stack, and not just for Bitcoin dollar, but Bitcoin candy bars, Bitcoin cars, Bitcoin houses. We need all those markets across the globe, and everybody needs to use it, and then we can get more stability. For sure, whether it will be really stable like the dollar or long-term stable like gold still remains to be seen, but it will be more stable. And for this we need scaling. So scaling is really the big deal. Crypto competition. So let's talk about a little bit about competition from crypto. I still think Bitcoin is the most decentralized, which is a good feature to have, because all the others, either they have the mining centralized or the programming centralized, or if you get a few people who basically control it. Bitcoin still has the best programming team, the best review process, and like the big blocks, I think other projects are either centralized. Ripple is completely centralized, and Bitcoin Cash, has this conceptual flaw that they want to replace credit cards, but you just don't have the bandwidth to do that, in my opinion. I mean, there's obviously huge debate about that, but so that's the end of this this slideshow, and which is good because now we can take some questions, please.
So the whale sitting on the price on the coin is actually sure. That's fine. Yep. I got it. So the whale sitting on the Bitcoins and keeping it out of circulation is actually increasing the price, right? So your thesis was that if they actually do more commerce with it, then it would stabilize the price. So can you elaborate on that notion? And secondly, what is your opinion on other crypto coins such as stablecoin or base coin, where there's almost a replication of the central bank, such as when the price goes up, increases supply, when the price goes down, when the price goes down, increases supply, when the price goes up, decreases supply, or something like that. The stablecoin or base coin concept, which has come up now.
Okay, so first thing, the whales, yes, it's true. Basically, you have a sort of reservation demand that is supply not hitting the market, and that's driving up the price in dollar terms. And that's okay, we need that until a certain point. But if you really want stability, you need to have it more distributed, and you need more people using it on a daily basis, where you have more fluid bids and asks for a ton of products. And on top of that, you need to be able to, entrepreneurs need to be able to use those funds to create value. And if they're sitting in the hardware wallet, it's not creating value. At this point, it may be perfectly fine that increasing the price and the valuation is exactly what we need to take the next step. But I'm talking about, long-term end game sort of scenarios. And stable coins or whatever, it's the same thing all over. So you have a monetary policy that, a few people cooked up, or they programmed it. So maybe the program's not good. You know, the Fed also has their programs and their models, but it's just their models aren't any good. So you have all these issues, and then ultimately it's centralized because a few people control it. And I'd rather have the harsh deflationary, very clear policy that Bitcoin has, even though it has these issues which we may not be able to solve completely. But that doesn't mean Bitcoin's a failure. That doesn't mean it. This just means it has fewer applications. Please.
Excuse me, with reference to your last slide, now where would you put Ether on that scale of being decentralized and also with the question of its greater value in terms of having more flexibility in terms of smart contracts and
So you're talking about Ethereum, which in my opinion is not a cryptocurrency because. Oh, sorry. So he's asking about Ethereum, what I think about Ethereum in terms of A, centralization, and B, how it competes as a currency, or that it's better because it has smart contracts. So I think Ethereum is a different product. It's not a currency. It's basically a contract and a currency at the same time. It's like if you have a Federal Reserve note, so you have the money, but you also have the contract written on the note. That's how you have to. So I think it's a different product. And do I think it's centralized? Absolutely. If Vitalik wants to do something with it, he's going to do it. And if that's good or bad, you know, that remains to be seen. But ultimately, it's a different product, different applications. So so I don't think it competes in that regard with Bitcoin.
My question, I'm a consultant.
Oh, sorry.
On the scaling side of things, Moore's law, every 18 months, computing power is about 5 to 6 projects and stuff. And I heard that you think Bitcoin Cash has a flaw in that on-chain scaling won't work long term. But what's your view on maybe having a balanced approach where you scale your block size in line with computing power and then down cost at the same time that you work on harder solutions like level 2 or lightning that are improved? Why aren't we trying to do that? I don't understand.
Yeah, sure. So he's asking about you know scaling. Why? First of all, Moore's law. So the increase in computing power should make up for that for the bigger blocks, and then B, why either way why we cannot have bigger blocks and second layer solutions. And actually, I agree with you. I mean, that's a question you have to ask Bitcoin Core, why you can't increase the block size to 2 megabytes. But the problem really, I mean, look, ask yourselves, I mean, how much has your bandwidth really gone up? Has it really doubled every 18 months, or has it maybe gone, you know, 10x over the last 10 years? So there are also schools of thought that think, you know, this advance is clearly slowing because you're running out of space on the chip. But yeah, that's a debate that people should be having, and you know, there has to be some way of managing that properly. And again, extreme thinking in either direction is probably not the right solution. Yeah. By the way, I really liked your presentation and the exposition of how disgusting it is to move money around internationally. I recently had a very bad experience myself. Again, another pro for Bitcoin. Sorry.
So I'm a consultant outside this space, so I might just not understand it. But you were talking about stability and how a wider use of Bitcoin would help that. I also think maybe the lack of stability also has, because it's actually uncertain exactly how much this is worth and how much it does. But also then you juxtapose that with scalability, and that the more you scale, then the more centralized you have to be if you're going to do all these transactions. So is there a trade-off on those two ends as well?
Are you talking about the trade-off between, because there is a trade-off between scaling and centralization for sure, but you're talking about a trade-off between volatility and adoption.
And scalability.
Volatility and scalability. So, in my opinion, the more scalable it is, the less volatile it's going to be. And the less scalable, the more volatile. Yeah, so there's a trade-off, yeah.
So are you saying the more stable, the more centralized?
Oh, that's what you mean. Well, In a way, yes. In a way, yes, but there's different layers, right? Because the core protocol remains decentralized, and then the second layer solution is more centralized. But in principle, I think you're right. So who's next here? Gentleman with the glasses, please.
Just going back to a question that touched on the larger accounts, the so-called whale wallets that holding large amounts of Bitcoin. Do you see these small, like in a way, centralized amount of Bitcoins in these small number of wallets? Do you see them as a risk to the volatility or long-term price increase in Bitcoin?
So he asked a question similar to what this gentleman asked. How do the whales influence volatility? And in my opinion, yeah, in the short term, because they suck supply out of the market, makes the price go up, but it also makes it more volatile because you have fewer actors influencing the price. So in the long term, and this is true of any kind of money, and gold also had the same problem. It needed to be distributed to make it more stable. So I think Bitcoin definitely needs that, yeah.
This is the last question.
Okay, last just gentleman in the back.
I believe, in my opinion, that Bitcoin also suffers from the dangers of centralization. And being a casual miner, I'm wondering, why don't we have more ASIC manufacturers when
So he's asking about Bitcoin itself being centralized, and I should have said that because I agree, nothing's perfect, right? Bitcoin also has some centralization issues. Like there's only 3 people who can actually approve a change in code. And you have the mining, which has been mostly in China, and you've got Bitmain, the biggest producer. Well, I can tell you why that was the case, because the Chinese government actually interfered in the market by subsidizing electricity prices, and that's why mining was so big in China, and that's why because of the other market distortions there, you had the producers there. But we are already seeing that change now with the Chinese government becoming more hostile. You've got Japan coming out. I think you have at least one other company Kodak wants to produce mining equipment. See how successful they are. But you have a few companies coming out, and in terms of location, you also have many different places now that are looking into mining. So I'm more hopeful on that part. So yeah, thanks a lot.
All right. Thanks, Valentin. Okay, we're on a